All right, everyone, I just want to jump straight into this stock. And if it's something that you find value in, all I'm asking for is 3 to 5 more minutes of your time right after this. I'm going to talk about the ticker symbols I mentioned this morning. We hit 2 home runs, 20% plus, one of them giving us close to 80% plus on the day, almost 120%, guys. I don't want to exaggerate, but you'll see it for yourself on the stocks chart. I mean, I talked about it at 235 when I was watching it in the morning over at the Discord, and it ran up to 480 and some change. If that's something that interests you, you're more than welcome to join us. We look forward to having you join us. We're 100 plus members already. The Discord link is down below. I mention them every single morning over at the Discord, and all I'm looking for is opportunities to maximize profits and minimize losses, whether the market's going up or going down. It's a great place to learn if you're a learning and beginning investor, as well as experienced investor coming to become part of a community that is looking to learn and grow together. So the S&P 500 index has been running after that pullback, hit a low here of 3,700. And I think right now that's our most important support if we are in a correction or crash, quote unquote, right? We have inflation worries. We have CPI data worries coming up this week. We also have the worries of tapering timing, which is why I'm going to talk about this article in just a moment. But when you see this little pullback here, it's making a lot of investors feel like we're in a correction or crash, because the whole entire S&P has been going upwards while stocks are going back down to March lows, or even going lower than that by a lot, right? A lot of different individual stocks within individual portfolios. Now, individual portfolios won't always reflect the S&P 500 index. That is something to keep in mind. And just because the S&P 500 index is going up doesn't mean every portfolio is. But right now, this is feeling like a correction or crash all over again, because the S&P fell just a few points, yet stocks are back down to these March lows or even below them. And now the question is why? Well, a lot of them are probably growth and tech stocks, number one. Number two, penny stocks, right? Penny stocks are getting hit pretty hard. Then number three, they're probably a SPAC. Okay, SPACs are being shorted heavily by institutional investors. So many articles coming out on that. And number four, it's just a stock that is just being beat down, not just by shorts, not by being a SPAC, not by being a penny stock, and not by being in many investors' portfolio because of growth in tech, but just it's an overlooked stock and volume is low. Those are the four things right now going on, hurting stocks. Now, if the S&P 500 index pulls back, there's two things that can happen. Either from this rotation of running up 500 points, getting out, where is that money going to go? It's either going to go to cash on hand for buying the dip opportunities for these hedge funds and institutional owners, or it's going to go back into certain sectors, and that's something we need to watch for. So that could possibly happen. And if not, everything together is going to get hurt because of inflation, scares, worry of, CPI data, interest rates coming sooner than later, and tapering happening sooner than anticipated. And this right here is an article that I'm sharing with you guys. I definitely recommend reading over all of it if you want to pause and write this down. But the main thing is they're disagreeing right now on tapering timing, okay? Some are saying that, officials are seeing growing pains as the economy gets back on its feet, and it has to do with growing, right? Like the S&P 500 and the overall market, for it to continue to grow, it has to pull back a little bit. That's literally what they're saying. In other words, they don't want to say that, straight to the point, but they're saying it indirectly. They're also saying here, that they're looking for continued strong employment growth over the rest of the year. Okay, that's going to be something to bring inflation up. Now, if it happens steady without picking up in a spike per se, and it's just a steady growth, then maybe things can move in a much more, sporadical way of not going too volatile, right? Now, they're also saying hopefully that the April report was just a 1 month kind of thing and we're going to get better employment. I certainly think so, because we got a lot of support, he said, referring to fiscal stimulus and accommodative monetary policies in place. So this was one of the main people, which is I think Charles Evans, that was speaking in this section of this article. So that's a very strong statement there and something to keep in mind. Hopefully it is a one-time thing, but if it continues, it could be an effect towards the market having to use their tools. And their tools has to do with interest rates, has to do with watching inflation, has to do with so many other things. Now, they also stated, they're close to their employment mandate and inflation is picking up. We'll be talking about that. That's another thing right there. That right there, just talking about that and just stating it and saying it that confidently, inflation is picking up, that can scare the markets very quickly, okay? They're also saying it's going to take some time to actually see it in data. I can't give you a time frame. So they don't even know when it's going to happen. They're making uncertainty become a real thing. And then they're also saying we need to see the data whenever it comes. Now they say that they're bullish about the future, which lets us know that there is opportunities in the job markets and maybe the overall market for the future, but there's going to be volatility overall. And there's going to be its fits and starts, basically the ups and downs. So right now, this is all about probably watching your favorite stocks, doing research on them, and watching the dips, but no one knows how to catch the bottom though. That's the most important thing. You want to know that you can't catch the bottom, but we can watch it and prepare for it. That's the most important thing. We're going to talk about the ticker symbols I mentioned this morning, as well as a ticker symbol you want to add to your watch list as it's pulling back, because we've been catching it for nice swing trade opportunities every single time it ends up at these levels. It's not guaranteed to run back up again, especially in this market condition, but it is one to watch as this weakness continues. Stay tuned. So the ticker symbol I have to share with you guys today is one that I've mentioned before, and it's given some great swing trade opportunities, as well as every single time it pulls back to this range, it's becoming an even better opportunity to watch and keep a cost average low if you are long on it. But we're going to talk about that ticker symbol in just a moment. So these are the stocks I mentioned this morning, and on a regular day, I'm looking for 5 to 10%, 10 to 20% on a great day, and 20% plus is a home run. So we had 2 home runs for the day, 1 regular expectation and 1 great expectation, right? So we're going to talk about that. But if this is something that interests you, you're more than welcome to join us. The link is down below to the Discord. We're 100 plus members already, all looking to learn and grow together to maximize profits and minimize losses. And we look forward to having you join us. You can become part of that as well. So CFMS gave us 5%. This was our worst player, but it was still a 5% opportunity. Obviously, if execution was done correctly. That's probably one of the biggest things I talk about with these volatile stocks that I'm watching. Now, PTE gave us about 15 to 20%, and DTSS was one that I was proceeding with caution, but I wanted to watch it closely, and it needed more inflow, and inflow shot up as soon as the bell rang. As it was pulling back from 333, it fell down to the 2s, and then it shot up, giving about 20 to 25% plus on that great expectation right there. That all I was looking for was inflow volume to go up, and it was one I was watching with caution, but the opportunity was there. Now the home run of the day was PTIX, and this is one that I was watching and needed more volume, and it was one that had a lot of volatility in the pre-market, and as soon as 10 minutes went by since I started watching at 235, it was already up 50% plus, and it was already a home run for the day, 10 minutes into the market, and it even got halted from so much volume. So let's go ahead and look here at this chart. So right here you can see when I started watching it in the pre-market at 235, started to run up a little bit, and then it took off, pulled back, and took off again, giving a high of the day 100% plus. I didn't want to say it like that because sometimes it could be too exaggerating, but no, it literally happened. From 235 when we watched it all the way up to 486, 490 range, you do the math, it was 100% plus from where we started watching it, but the high of the day was an 80% plus opportunity. So at the end of the day, can anyone catch it the full ride? No, not at all. But within that full ride, there was plenty of room to get anywhere from 5 to 10%, 10 to 20%, and 20% plus, guys. And this is what we do and aim for every single day. If you're interested, the link to the Discord is down below in the description. So what ticker symbol do you want to add to your watch list if you don't have it already? And this ticker symbol, I've talked about it before, CHPT, Charge Point Holdings Inc. Now, I definitely recommend every single investor doing their due diligence and research, but we're heading back towards, I wouldn't call this the floor, but where the support slash floor has been since this bearish run, right? Since it fell downwards at these points, it's actually picked itself back up. And every single time it has given between 10 to 20%. And the highest was from here all the way up to $32, giving just about 30% plus gain, right? Within days. Now, I'm not saying that it's guaranteed that when it gets back to these levels, it's going to pick back up and give a 5 to 10%, 10 to 20%, or 20 to 30% gain. But it is something to start watching because it's giving some great swing trade opportunities. Now, in the market conditions that we're in, it can pull back even harder. But the closer it gets to these levels, anyone that is long on this one and been catching the dips can catch this dip again and watch closely. And if it dips even more, if someone's conviction is high enough, it's another opportunity. Every single dip is an opportunity. It's not a setback. It's a setup for the next bull run. And in every single pullback is the next bull run. That's how they get started. Bull runs start as stocks start to fall, guys. It does not start once they hit the bottom and pick back up. No, the beginning started here. You just have to watch it. That's the part that takes work, patience, and execution for the best opportunity. So that is something to start watching if you don't have it on your watch list. And this is a long-term opportunity because it's in a sector of tech and growth. But within that long term, it's given some nice swing trade opportunities. And again, I'm not guaranteeing that same result. But at the end of the day, long term, if you do your due diligence and research, this is looking like an opportunity based off of analysis ratings and the articles that I've read. As always, guys, thank you guys so much for watching, and let's make some money.